AMC stock is making a nice move today, up about 4%, especially after the unusual option activity that we called out in yesterday's videos. It is not a big surprise to me that this is happening, but what else is happening? Why could this rally be more sustainable? What do you guys need to know? That's what we're going to cover here in this video, as well as go over all of the specific data around AMC stock that is very important, because we are at a very important level. So hit the like button, subscribe to the channel, do what you guys got to do, get your free stocks down below in the description of this video. And if you guys want to come trade with us live in real time, link down below in the pinned comment. This is the most exciting time to be a part of that program, because we are going after the earnings trades. We're trying to make contracts free, and that's exactly what we are doing over there in the group. So if you guys want to be a part of it, check it out. Nonetheless, AMC stock is at $18.18 per share, up 4.03%. It's a very strong day. As soon as we broke above the 50-day moving average on the 1-minute candlestick chart, we have pretty much stayed above that 50-day moving average throughout the whole entire day. That is showing a lot of strength. We just actually broke under it and then broke back above, and now it looks like we're going to find a little bit of support, hopefully around that price as well. That's not as important to pay attention to the 1-minute chart unless you are scalping it, but we are at a very important technical level yet again, and I think tomorrow will be the day that we will likely break above that, and that is going to be the 50-day moving average. That could set us into this next big rally. But exactly what is happening today? So there's multiple fronts to look at this. So you're seeing oil and energy down a lot. Natural gas down 10%. That's a huge move. Brent crude, just regular oil, down about 5% across the board. So that is very, very good. It should, in investors' minds, dampen some of that inflation that we are expected to see continuing because of energy and food. And the more energy actually goes down, that's a less chance of seeing a recession, because when you boil everything down, there's really two things the markets care about a lot, and then there's one thing that could happen and the markets would freak out about, and it would be very bad, but it's less likely, and that would be some kind of chemical weapons or nuclear attack. That's really the one thing where it's like markets are not pricing in at all. You could see a huge down day if that were to happen, but is that guaranteed to happen? No. But generally speaking, the only two things the markets really care about right now is the balance sheet. How fast is the balance sheet going to go away? What kind of interest rates will you see? What kind of yields will you see on the treasury bonds? Because after all, if they're getting rid of the balance sheet, they're going to be selling assets off their balance sheet, which are treasury bonds. And that will drive the rates up. That will make the rates like you and me, the rates that we would pay for auto loans, home loans, etc., go through the roof. Not good for demand, not good for the prospects of a recession. And then that kind of ties into the other thing the markets really care about, which is a recession. How soon are we heading into a recession? Is this a possibility this year or next year? You did have yesterday, Goldman Sachs came out and said there's a 35% chance here in the next 2 years that we will go into a recession. So they are definitely on the more bearish camp, and that's kind of what sent stocks down yesterday. Now, on top of that, this has not actually happened yet. By the time this video is out, you'll likely be getting some of these headlines, but you do have Fed Evans that speaks here in about the next couple of minutes. He is usually on the dovish side, so that could actually be a bullish thing for the markets. Now, the big catalyst for this week, as you guys already do know, is Thursday, and that is going to be Fed Jerome Powell, if they're going to do that 0.5% rate hike, which the markets are firmly pricing in with about 90.4% probability at the May meeting, and pretty much 90% throughout the whole entire year of just getting back-to-back 50 basis point rate hikes. If they're actually going to do that, Fed Jerome Powell is going to confirm that on Thursday. And that could be a bad thing, but the markets really care about what's going to happen with the balance sheet, because since 2008, we have never reduced the balance sheet. As you guys know, as we have talked about here on this channel many, many times, when you reduce the balance sheet, it makes yields on treasury bonds go up. Now think to yourself, this is the best way to imagine it, the best way that I was first able to think about this concept. Raising the federal funds rate has nothing to do with the rates that you and me will pay when we go to get like an auto loan or a home loan. It's really around the treasury bonds, because why the hell would a bank give you a loan for the same as they would give the government a loan. You are much more risky than a bank. So they charge you a lot of interest on top of that, right? So if you can go get a 10-year treasury bond right now, because the bond rates have been going through the roof, and you can get 2.89%, why the hell would you lend out money to you at 2.89% or even 3%? You wouldn't. That's why auto loans, home loans are at 10-year highs right now. Home loans have went up to, 5.25%. So that's how the banks really make their money, because it's competing asset classes. Now, if the 10-year treasury goes through the roof because the Fed keeps reducing their balance sheet and drives yields up, and say this rate is at 3.5% or 4%, your home loan's going to be at 6, 7, 8%. So that's really the worry for investors, and that's why the balance sheet, long story short, is so important. So it's going to be big to see what Fed Jerome Powell says about the balance sheet and also raising rates, but more so the balance sheet. That catalyst is on Thursday. Now, for after hours today, you do have Netflix earnings, and Netflix is in a very interesting situation right now. They cut access to Russia, so they're expected to lose 1 million subscribers. Some preliminary data from data analytics firms do estimate that Netflix could add as much as 4 million subscribers. They're estimated by Wall Street to come in at 2.5 million, so it could be a very good response from Netflix, and that should help to boost up the entire markets. But you could also get those negative headlines out of Netflix earnings that could drop the markets as well. But you're definitely going to get a sentiment change here by after hours, and especially by the day tomorrow. I would imagine it's going to be bullish. Netflix has gotten beaten into the ground, and if it is bullish, that should push us past this 50-day moving average, this very important level that we are currently sitting at. Markets are taking a little bit of a move down as Fed Evans is coming on live right now. So pretty interesting. And that 50-day moving average overall is at $18.57 per share. So if we break above that, you could head to 21, even this 100-day moving average by the end of the week. That is at $21.56 per share. That's going to be the next most important level. As far as the RSI, that is under the neutral level, so it is on the oversold side. The MACD is incredibly bearish. Usually you want to be buying when the MACD gets this bearish, like even back here, right? You want it to be a buyer of AMC stock. And I think that's what hedge funds overall have been doing. And I think that's why you've seen a lot of that weird option activity for yesterday. And for today, it's kind of a mixed bag, but you are seeing a lot of call activity that is coming through. You're also seeing a lot of put activity that is coming through as well. It's literally a mixed bag. The positive order value of 32%, 14 orders totaling $3.2 million. Yesterday, you guys can see 90% positive order value. 82.71 million, and 25 orders went through. So you can see there's a big difference today. There's a lot less dollars actually heading into AMC options today rather than like we seen on yesterday. 82.71 million was a massive day for AMC options. So pretty interesting right there. Just keep in mind the dollar amounts here, right? There was only $3.2 million of options placed on AMC stock so far today, nothing comparatively to yesterday. So I do think there is still that bullish skew to the option activity for AMC as of right now. If we take a look at the short interest, you're looking at 19.45% short interest of free float, 100.24 million shares that are sold short, cost to borrow max of 2.13%, utilization of 100%, and days cover sitting at 2.37. Now, I don't necessarily believe the cost to borrow numbers could even possibly be this low, just based off of bond rates and what the cost of borrowing capital is. I don't think those numbers are correct. And I don't think the short interest is correct as well. They're really just estimating here. And, it does not look like to me shorts have been covering, and that's not what the chart does suggest. So pretty interesting right there. As far as the max pain, let's go ahead and pull up good old Amy. Hopefully she can go for her morning run tomorrow. That's why we got the lucky hat on. Hopefully it does serve us well, especially with Netflix earnings. It's a good time to wear the lucky hat. But max pain is $18.50 per share by the end of this week. And if we pull up the stock tracker data, this is not as important. And people were like, why are the options not important? The last time I said this. And it's not that the options are not important. What is held on the option chain when we look at stock tracker is not as important as when you get a catalyst, when you get those weekly option buyers, right? What really moves the stock is when premiums are cheap. Let's say a $25 call right now, I'm just estimating here, it's $25 for that contract. Now the stock rips up to $24, $25. The market makers have to hedge out your option trade at $25.25 per share because that is the break even. You have to factor in the premium. Now, if somebody else 2 weeks ago bought a $25 call, but they paid $200 for it, well, now the market makers still don't have to hedge out until $27 per share. That's the difference here. That's why I say these options are not as important. What really is important that moves the stock are the weekly option buyers. When that low premium it is there, and essentially you make a lot of money on options, you force the market makers to become delta neutral a lot faster. But you are looking at 12,000 calls that are in the money, 131,000 that are out of the money. Overall, the thing that I really want to watch for is that 50-day moving average at $18.57 per share. That's going to be the most important level as far as I am personally concerned. If we break above that, shit's going to get a little crazy. If we cannot, if Netflix earnings are bad, things do not go good, then definitely $15 per share is still in the cards. I don't want you guys to forget that. It's going to be very volatile, and you guys got to be ready for whatever, and the markets are actually taking a move down right now. So thank you guys for tuning in. Appreciate every single one of you guys. Hit the like button, subscribe to the channel, get your free stocks down below, as well as come join the trading group if you guys want to be a part of it. Thank you guys for watching, and I'll see you in the next one.